Okay, hi everyone. Good evening to those in Singapore, to those in the US. Good morning. Um, so just to make sure everyone can hear me, you can just go to the conversation and type a one. You can hear me. Just to make sure the audio is working, just type a one if you can hear me. All right. Anyone else? Can everyone hear me? Type a one, so I have an idea. Awesome. Great. Okay, so we'll start today's session, and then we'll let others join as they come along, because I think there's quite a bit to cover given the situation in the Middle East. Again, it's not yet confirmed that we are back into full-blown conflict or full-blown kinetic conflict, but we are pretty close to that state right now. All right. So just a broad overview of what's happening also. Right now in Iran, we have elements of the IRGC, which, they're not a united leadership front right now. So there are a lot of elements who are dissatisfied with the so-called deals that were made with the US. No one actually knows what elements of the entire IRGC launched those attacks that were launched on the commercial vessels. But having said that, we'll see, into next week, what the final resolutions are. The naval blockade by the US has not been reimposed yet. All right, just to remind everyone of that. That would be a first sign that this has truly escalated to the next level. Also, just some quick announcements before we jump into the charts. For those who would like to receive if you took part in a trading competition and you want to retrieve your trading stats, meaning how you did, your Sharpe ratio, your win-loss ratio, or your equity curve look like for the purpose of learning and sort of improving, do drop us an email or reply to that email that we sent you. All right. And we will send you the stats together with the equity curve, which you can then go through with your teammates or even with Quanex. And we will also be sending you another email of how to set up your affiliate links. So if you have any friends you refer to the program, or any friends that refer for a challenge, you guys can also earn an affiliate fee for that, and offer a discount to your friend for offering that, for taking that challenge. All right. So just two things to watch out for. One is your training stats. Make sure you get that if you haven't already. And number two, the affiliate link. All right. And then, of course, before the end of July, just remember that those discount codes for the competition you can use until the end of July. All right. So without further ado, again, congratulations to our winners. Amazing results for our winners. Top instrument traded for the winning accounts for those who weren't here on Wednesday were essentially stock indices and gold. All right. So back to stock indices and the market update. We'll go through the S&P 500 first, the ES. All right. So right now, the ES is chugging along quite nicely. And of course, this was prior to some of the news we had over the weekend and the escalations to the Iran front. Just as a guide, 7648.25, or more broadly 7650, will likely serve as the key resistance point, which the S&P 500 will have to get over, all right, for it to really start, or the ES has to get over, for it to really start gaining the traction and the momentum to the upside. Things are still looking constructive for now, but there is a potential bearish flat pattern that could happen as well. What would happen is that this could make its way up to, or just fall from here to the 737 level, thereabouts, all right, before making a bounce and going higher. Either way, right now, the overall picture looks bullish, all right, still. And it doesn't actually break the bigger bullish picture until this level here breaks the 7230 level. All right, only 7230 breaks will the bigger picture start to actually turn bearish, and both paths, which would be still bullish over the medium term, would then become invalidated. All right, so overall, if you are trading the ES, please bear in mind that we're in a broader bull market. All right, and this is really still a correction or consolidation before we break out. All right, same thing for the NQ. All right, so on the bigger picture basis, all right, the NQ has been a little bit more laggy versus the ES. All right, there is a potential for this to actually push all the way down here towards the 28260 level or 265 level before bouncing higher. But anything over 30980, this should go higher. Again, the Nasdaq has been lagging the S&P 500. We are looking for that catch-up play eventually once risk appetites actually do resolve. All right. In terms of the IWM, all right, this is still consolidating very nicely at the top here. There is no true directional bias at this point in time with regards to the IWM. The natural bias would be as long as the 289.65 level on the IWM does not break to the downside, we are looking for continued upside in the IWM. All right. And again, this is interest and of note given how interest rate sensitive the IWM is relative to the ES as well as the NQ. Now, let's move towards the US 10-year rates. So again, during the midweek, show the chart. All right, there's a breakout in the US 10-year rates. If I zoom out a little bit, there's a bullish breakout. All right, the question is how far this could go. Based on just some measurements, all right, this could reach this level here, 4.67, about 4.65. All right, as the first destination for as a target for the US 10-year yield. Then we'll see how it behaves from there. So the idea is that this starts to resolve to the downside again, but if oil starts to spike again and everything starts to spike again, we could see the US 10-year yield really start to spike and push towards that first target. All right. There is a second target after that, but let's see if it even gets to the first target first of 4.65. We just found somewhere here. All right, so interest rates again on watch, and interest rates very key, especially if you are trading in the tech space. Okay, all right, now let's move towards, okay, today we'll cover currencies first, and gold and Bitcoin. Then we'll move to the sector ETFs. Quite a bit to cover on the sector ETFs. All right, so in terms of euro dollar, all right, right now, euro dollar also seems to have bottomed out. All right, and continues to bottom out. But just note that there is a head and shoulders pattern that is starting to form here. And again, in line with the conflict, if let's say the conflict continues to rage on and the USD continue to spike, you could see the US dollar actually push higher and the euro dollar push lower. If the euro dollar was to push lower, what would be the target on the head and shoulders? We could actually start to see the head and shoulders start to push towards the back towards the zone here, somewhere in the 1.1325 area for the euro dollar. All right, so watch for a break into the week of the 1 point of this head and shoulders neckline. All right, the neckline level would be found at 1.1415. All right, a break of the neckline. Do note that head and shoulders necklines for the S&P 500. They often tend to do something like this, right? They will bounce up and then down, a bit messy, come out, and then finally they'll do a downside break. All right, so just note that tends to be how the S&P 500, the euro dollar tends to trade when it comes to the overall pattern with regards to a head and shoulders pattern if it starts to break to the downside. All right, just note that. Having said that, also dollar Swiss, which is very closely related to the euro dollar. All right, and this has been a great carry trade. I am expecting again with the breakouts as well as this cup and handle breakout. All right, for this to start moving towards this box to the upside here. All right, around the 82 to 84, 50 to 85 level. All right, so I am expecting into next week for dollar Swiss to actually move towards this level. So if you've been long this on a carry trade, congratulations. Got a great carry trade. You continue to have a swap points. But once you've crossed 82, I would start to look to pair the overall position. All right. Now, with regards to dollar yen, all right, we have no intervention signs as yet, but we are pushing towards the ultimate target, which we had mentioned earlier in the week. So we could see this push towards this level here, which is the 163.75 to up towards the I would say the 166 level. All right. So I would say that we could see this actually just immediately resolve on Monday towards this level here like this. All right. It is a very real possibility. But again, once we start to move towards these levels, especially levels that are above the previous intervention highs, please do note that the Bank of Japan can come in quite strongly and quite swiftly when it comes to an intervention. So if you're trading this on the long side, just make sure you have your stops in place, and you trail your stops. Don't forget to trail your stops, especially if you're trading on the long dollar yen side. All right, next one. All right, let's check Bitcoin out. So Bitcoin, it is carving up quite nicely. All right, and holding up quite nicely. So it's defied some expectations, and instead of actually resolving to the downside, it's starting to carve out an inverse head and shoulders. All right, partly because of news that Michael Saylor has, decided not to sell so much Bitcoin, and they have some form of resolution there. All right, but again, inverse head and shoulders neckline is found at the 64,300 level, and this could quite easily push again to the upside. So as long as we don't see any sort of like serious downdrafts into next week, do watch for potential pop in sort of the BTC chart. All right, BTC chart, if we are doing this, we could see a move towards these close to the 70,000 level again, all right, which would be the inverse head and shoulders target. So BTC is set up and on watch for next week, all right. The bears have had enough time to push this down, and it hasn't worked so far for the bears. So right now the bulls may be putting this back in place. So do watch BTC the next week. All right. With regards to ETH, all right, same thing here. We have a potential double bottom. I think this is a very nice double bottom that's in place. So do watch for a potential resolution to the upside. In terms of a target, I would say do watch for a movement back towards somewhere around this level here, the 2125 level. So do expect the 2100s to be revisited again in the next week for ETH USD. And in terms of ETH BTC, all right, as you can see, this has exceeded our targets already. And this is actually expected to push towards this moving average here, which is somewhere around the 0.03 level. So do watch for that. There is a clear change of trend now in terms of expectations. So I would be looking to buy on dips the ETH BTC cross. All right. Now, in terms of gold, gold has been trying to push higher. All right. I'm still expecting this pattern for it to push towards the 4380 level. It is taking a bit longer than expected. But as long as the lows here in the 39, I would say the 39, as long as 3930, 3940 actually is not broken, all right, we should start to see gold continue to try to push to the upside towards this 4380 level. but a break off, all right, this 3940 level here, I would start to reconsider the bearish alternatives for gold again, all right? But for now, similar to Bitcoin, expect some sort of bullishness into next week because I think the bears have enough time to push this down, and they have not done so, all right? Silver as well, all right? Silver again, tapped the top of our box very nicely, okay? I am expecting a push into next week towards this level here, towards the $71 level, all right, eventually. So again, if you have been sitting on your silver, next week could be your week for this to start to resolve higher. But again, just bear in mind that if the stock market does sell off, then do expect silver to actually resolve to the downside and potentially gold as well, all right? In terms of the gold-silver ratio, all right, struggling around after hitting this target here. So what we're kind of expecting is for this to continue to consolidate sideways in this fashion, just up, down like this, all right, before making another resolution to the upside. For now, that's kind of the expectation. Still expect gold to outperform silver, especially if silver tracks risk assets more. All right, so gold may actually stay kind of flat with the dollar rising or slightly down, but silver would actually move significantly further down, especially if there is a risk-off environment. All right. Now, in terms of overall ETFs, all right, so if you look at the semiconductors, we've got SMH and we've got SOXS, XX, similar patterns, all right. We have a break of the move to the downside, all right, and trying to work its way back up towards this resistance point here, the 633 level. Against as semis go, so go the market, all right. So do watch for semis to start to continue to try to resolve to the upside into next week. But if it does push lower because of the risk of environment, all right, do watch the 531 level as a key level. In terms of a risk level you do not want to break, because a break of 531 would mean that there is further downside in play. All right, so I would say right now that the semis have a clear direction, but in terms of the bias, it is biased towards it moving higher and testing the sort of underside of this support, sort of like support line turn into resistance right now. All right. Another space that is also looking like there is some bounce in motion with the SK Hynix sort of like IPO in place. All right. Hope some of you managed to catch that IPO. Okay, so what we're looking for still is the right side of the shoulder for the memory play. All right, so this could, potentially still move towards from here, resolve to the downside, or move up first towards this key level here, this resistance level here. All right, in the 72 to 74 region. All right, before resolving to the downside. All right, for now, until the semis, all right, can break this high here. Sorry, not the semis, the DRAM ETF, which is the memory ETF, can break this high here. We may have seen a structural top in the memory space. And bear in mind that this year, close to 25% of the S&P 500 gains have been from the memory space alone. All right, so this has really been a monster runner. And we may very well have made that interim top already. Okay. The AI power and infrastructure ETF, this is not a very liquid ETF, but good to get an overview. It's consolidating again in terms of overall, in terms of the overall pattern. It hasn't made any clear resolutions yet. One of the big components of the AI power ETF is Bloom Energy, which fell because of the short seller report that was pushed again on Thursday, Friday. Just to note that the short seller report on Bloom has been published before, so it's not a new short seller report. All right, but again, this is a major sort of like choke and bottleneck point for the AI data centers piece. This ETF tracks the guys who actually supply the power to the entire space. All right, so AIPO and its components, do watch the components closely with regards to this ETF AIPO. All right, now software. Software again. So guys like Microsoft, ServiceNow, Palantir, Oracle, they're all within this ETF. So we can see we found a clear interim bottom. This trying to find, another move to the upside. I would say that until this level here is broken, which is the high, the 108 highs is broken. Do expect that this ETF will continue to sort of like, the software sector will continue to struggle a bit, especially if news of continued sort of like disruptions happen within the software space, or potential disruptions or disruption fears happen. All right. But having said that, into next week, we have been noticing that whenever the broad market sells off, all right, software has actually risen. I am expecting another move towards the 102, this 101 to 102.50 level, all right, before, the software side either consolidates again and moves to the downside, or it makes it goes sideways for a while before it actually pushes to the upside again, all right? So this area here, all right, quite a key area, the 101 to 102.50 level, all right? So just keep an eye on it for IGV. If you're holding some software stocks from the low, this may be a point where you may want to lighten up some positions, all right? Now, with regards to other ETFs, all right, so we've got a couple of ETFs that we watch a lot, all right? AIQ is the most common sort of like ETF to trade the overall AI space. All right. However, it is of note that as long as this 59.84 level, holds, we should continue to see this ETF, look for higher highs. However, there is a head and shoulders pattern here that has started to form, right? And technically, the right shoulder has already broken. So the question is, it broke and then it reclaimed. So the question here is whether this neckline here breaks down again, all right, and we get a follow through to the downside, or we find support at this 59.84 level. But if let's say you just look at a classical head and shoulders pattern, all right, then of course you are looking at the downside move towards somewhere around this moving average here, which is the 200-day average, which is at the 53.70 level. All right, so expect it to move down, test that level, and then after that come back up again. If it does actually do this and move all the way down, this would be a great spot to actually start adding positions if it doesn't actually break through or slice through, all right? This would be a great spot for AIQ. All right, solar ETF, all right. We had quite a run in solar, all right. 10 is the solar ETF. You can see here this year that into May and June, solar had an amazing run. As solar was starting to be touted as a potential solution provider for the AI power bottleneck. But since then, of course, we've had a move to the downside. It is testing the 200-day average, all right, at the 54 level. I would say that if it can push up from here, then your stops will be at 52.93, looking for long opportunities and biases, long opportunity biases to the upside. All right. Okay, in terms of other ETFs, sector ETFs, cannabis is going nowhere fast. All right, but technically this could be setting up for another move higher here. All right, wouldn't be a sector I really watch right now. RK, which is all your speculative tech. Again, this is super choppy. When you see something like this, try to avoid trading it because this is quite difficult to trade whenever you have something like this. You could argue, yeah, sure, there's however many head and shoulders, but man, like if you try to catch any like upside moves here, you're gonna get chopped up real bad. All right, so I would avoid this ETF altogether if I were you. All right. Then of course the Chinese names have been coming back to life. All right. So Alibaba, and together with the Mag Sevens. So these are on watch. All right. So KWEB is the ETF for the broader Chinese internet sector. So do watch KWEB. All right. Over 2730. All right. We should start to see a lot of the Chinese names start to move higher. Again, a lot of names drag down because of the scandal of the food delivery services, but that is now getting resolved, and the names are starting to consolidate and pick up again. No clear confirmation yet. All right, it needs to hold over this 2550 level or 2730. We start to see momentum start to build. All right, no clear pattern that is a screening buy yet, but definitely a sector that is on watch if you're looking for bottom fishing along with software. Now, another ETF, of course, last week we had great moves in Meta. So I go through the chart in Meta and Baba shortly. All right, but if you look at that, this entire move here was almost driven entirely by Meta in the last part of the week. All right, so again, Meta will be on watch. There is a lot of news now that Meta has one of the leading frontier AI models, and apparently it is better than Google. All right, so let's see whether that proves to be true. All right, so we're just going to look at Meta, which had a great week last week. All right, you can see here, this is the kind of move you want to see. And again, down here, we had a very nice inverse head and shoulders breakout. All right, I don't know how many of you caught the move. All right, but the move, which started really on, I would say Thursday, Friday, wasn't an easy move to catch. Where most people would have caught the moves if you were trading this would be actually this area here, this box here. This would have been the area where you would have had a chance to catch the move. But again, this is consolidating sideways right now. All right, if let's say this holds up and the market comes down, all right, and it continues to just go sideways, do watch for long opportunities again in Meta, setting up for a test of this 744 level, all right, or 750 level. So Meta, and then Baba. All right, this is a name that is to push higher. So Chinese names, again, e-com names, using KWEB, starting to push higher. Huge consolidation cluster here in the 114s. Do watch for this to come over and break over to swing back towards the 120s and higher. All right, so this is a very nice bottoming pattern, and you could argue, yeah, yes, this is a cup and handle. All right, very nice episodic pivot. All right, so Baba, a name to watch into next week. All right, so with that, I kind of covered my entire list of what I wanted to cover. Guys, if you have any questions, please type it in the chat. Anything that you are curious about or want to ask, or any markets that you are curious about. All right, so do type it in the chat. Thanks. All right, just feel free to type it in the chat. Okay, MU pretty much the same as the DRAM space. All right, so MU, SNDK, again, all consolidating very nicely. So in the very short, okay, so let me just zoom out and then I'll zoom back in again. All right, so if I zoom out, this looks quite terrible. There's an inverse head and shoulders trying to form, right? Okay, so we are looking at potential inverse head and shoulders trying to form, right? So this is looking quite bad and quite dangerous. But I do want to point out, though, that on the shorter term time frames, especially towards the start of the week, right, there is also an inverted or inverse head and shoulders pattern that would form, that will carve out the right side of the shoulder. All right. So this is the levels we are. These are the levels we could. This is kind of the neckline that we're looking at. This 1012 level. So this goes back up towards this level here. All right. Pushes down here. All right. and then pushes here. All right. This could become very interesting in terms of a target for Micron. All right. So just note that. All right. So potential target if this actually breaks out 1138 for Micron. All right. Okay. Some of the other stuff. Do you expect markets to rotate to other sectors, consumer staple, tech sector takes profit next week? Very possible. One of the better things I found to do is actually right now when you have very quick rotations back and forth between tech and other sectors, is just to buy the broad ETFs. And of the four major ETFs in the US, all right, the Dow is the I mean not the Dow, the triple Qs are the laggard right now. So it might be better to just get on the triple Qs if you're looking to buy at this point in time. All right. But yeah, the sector rotations are happening pretty fast at this point in time. All right. Now we're going to cover. Okay, there's some requests for some commodities. All right, probably because also I would say the crisis, if the Strait of Hormuz stays blocked again, all right, what could happen is that we could really start to see fertilizer prices start to climb again. Names like CF would benefit, and yes, agricultural commodities would start to also benefit from the whole thing. All right. Now, having said that, all right. Yeah. So CBOE has a very nice consolidation pattern in place. Just into next week, if we zoom out a bit, all right, this may be a bottom that is in place for the SIBO. So actually, this is the kind of chart you want to see if you want to actually sell some options, sell some puts on the downside here. But there is a very nice consolidation pattern that's happening here right now. All right. And you see stuff like this, you're looking for some sort of breakout to the upside. However, you want the breakout to be some sort of episodic pivot type breakout to really confirm the breakout. So it shouldn't just squiggle up and down and then push really higher. It should like one day it just opens here, all right, and then it pushes higher here like this. All right, so it skips this entire thing. Usually a breakout that gaps open is more reliable than one that does something like this. It goes up and then it goes down, up, down, and then it slowly breaks out. All right. The problem with the pattern that goes like that is that whenever it squiggles up and slowly pokes up, is that it tends to often do this. All right, up, down, and then it goes up, and then you think it's okay, comes down here, tests, you buy, goes up, and then it fails. Right. This happens quite often with patterns like this. So the most ideal breakout pattern is an episodic pivot that happens like this. All right, on the bigger time frame charts. And then what happens is you see a quick sort of like sideways consolidation pattern, something like this. All right, down here. All right, and then you just quickly start to add your long positions here. All right, so episodic pivot, bang, consolidate, buy. All right, that's kind of what you're looking for. If you see an episodic pivot to the upside, immediately you can start to sell put options on the downside and buy calls on the upside for a continual runner. All right. Okay. Number 11, sugar. Let's see. Sure if my chart will show up. All right. So sugar has a very nice consolidation. Okay, this is the most liquid sugar chart. This is the number 11 sugar. Okay. Again, it's actually quite similar to the CBOE. You've got a very nice consolidation here. Just bear in mind that sugar isn't the most liquid ETF, futures contract around. So this can be super gappy, but when it does trend, it trends very nicely. All right, it's one of the most volatile contracts around. One of the ETF that can be traded, does trade on the LSE, is called Sugar, SUGA. All right, it is denominated in US dollars, even though it trades on the LSE, but it isn't as liquid. All right, so you can trade the futures, but the buying power take up for sugar is quite a bit for a lot of brokerages. So if you're trading sugar, just bear that in mind with regard to you know checking your margins before you actually trade those sugar contracts. Yeah. Okay, so wheat. This is the one. Okay, so wheat is, yeah, it's bullish right now, but the issue is right now this is an unresolved and an unknown sort of like pattern. All right, so just watch this box here. All right, watch this range here between 635 and 648. The only thing I would caution you about wheat contracts is that they can be super gappy. So if I actually zoomed in into the 5-minute, all right, to the 2-minute, all right. When they are in illiquid mode, right, you can get very gappy, very difficult to trade scenarios for wheat. Okay, but for now, it is still consolidating nicely in the range. Again, you want to see this start to push and resolve to the upside with good volume, but no real view. This is kind of a neutral view for now for wheat. Do not trade wheat options. They are super illiquid. All right, cool. Any other thing that you want to cover? Or anything other thing that you guys want to cover? If not, we would be done for the day. Any other sort of market or nothing else? All right. If nothing else, all right. Thank you guys. All right. Just a reminder: if you your trading stats, please do actually reply to our email. We will send it to you. I will see you guys on Thursday this week, 8 p.m. instead of Wednesday at 8:30. So Thursday at 8 p.m. All right. Have a great trading week ahead. Expect the start of the week to be a bit choppy, but again, we have some interesting stuff in play like Bitcoin and gold. All right. Have a good one, guys, and I'll see you guys next week.